All right, everybody, welcome back to the channel. It's Millennial Trade. So it's December 5th, 2023. Today I was actually catering. I don't usually cater on the weekdays like this, or at least not in the mornings, but I was catering today. I did still trade, but it wasn't really a true scalp because I was in the trade for like 2 or 3 hours. I'm up about $300 on the day, so it was nice to be making money not only from working but also from trading. And that's really like one of the benefits, the flexibilities of trading, is that, you know, even if you are working, even if you have a regular job, there's nothing really stopping you. I mean, if you don't have, I guess, the proper device, phone or tablet to trade off of with proper Wi-Fi or whatever, that might be an issue. But besides that, there's really nothing stopping anybody from trading, even if they were at work. You know, I guess if you're like a cashier or something and your attention has to be devoted 100% of the time that you're on the job, maybe that might be a little bit difficult. But I was catering today, and I actually had to drop food off at a movie set for the second day in a row. They let me drive the Volkswagen. They let me go out by myself today, and they gave me the keys to the Volkswagen. So that was a lot of fun. I don't think I've ever driven a Volkswagen, but you can follow all of my catering gigs and watch them on my Instagram story. So follow me over there at Millennial Trades. And thanks for watching my shorts. Thanks for watching my reels. One of my reels is blowing up tens of thousands. I think it has like 30,000 views so far. So guys, thanks for watching my short formed content. And to those of you that were in my stream last night on my other channel, that was a lot of fun. We'll do that again really soon, I promise. So yeah, trading, you know, there's so much flexibility and there's so much creativity, and I do think it's a productive thing to do, a very productive thing to do. Like, even though it's kind of like, I think the technical term would be profiting with no services rendered. Even so, I just hope everybody tries it. I hope everybody starts following the markets and getting interested in the markets the way I did. So, let's talk about the first quick thing that I want to mention here. We are going to talk about the services numbers. I mean, it happened almost the way I predicted it entirely a couple of days ago. Or not predicted, but this is the likely outcome. We're going to talk about this because the economy is still hot. It's not cooling off the way that we're hoping if we want lower interest rate hikes or interest rate hikes that don't last as long. So I'm going to get into all of that. But before I do, I want to talk about Ukraine. If you want to know where your money is going, look into this story about Ukraine. There's a Ukrainian soldier that went viral, all right, because of a TikTok video. So Ukrainian soldiers are filming TikTok videos out in the field, okay? I mean, that's at least what they want us to believe. And they're blowing up on TikTok and they're dancing. You know, so you got to think, you see one TikTok video, right? It's maybe a 15-second clip of this dance routine, but how many hours and how many takes did it take to actually get that video produced? How many hours did this person had to learn the routine? So they're not fighting Russians, they're learning dance routines. And then think about how many, I mean, I do sometimes 2, 3, 4, 5, 6 takes on one short. So if you're dancing in the short, think about, I mean, just think about that. Think about the time and the devotion it takes to pumping out viral TikTok content. And, you know, supposedly you're in the field fighting Russians. So this is where our money is going. I just want Americans to be aware of this. But, you know, people from all over the world are supporting this quagmire. And that's what it is. Let's just come out and say it. It's a quagmire. I mean, I was having this discussion with somebody in my personal life, and, you know, I was like, well, I mean, if they're doing so well, right? If the Ukrainians are pushing the Russians off, and if they have time to make all of these viral videos and stuff, why do we need to support them? And this person's response was, well, they haven't won the war yet. So, you know, this is the mentality, right? I don't want to get into a political rant here, but I just want you guys to be aware of that story. Go look up the viral Ukrainian soldier TikToker video. You got to check that out. Look at that story. So the services sector came in better than expected. And I was worried that this was going to happen because yesterday we got the Chinese numbers, which were also up as well. And I think I didn't bring my computer. I should have brought my computer with all of the figures on it. But the point is that the economy is not, it's not slowing down the way that we need it to if we want lower interest rates. I want higher interest rates personally, because those are the kind of bets I'm prepared to make. But a lot of people want lower interest rates. And so when I saw the numbers from China last night, and I posted this on my stories, on my shorts, I saw those numbers and I was thinking, well, if the numbers come out like that today for the US, that's really going to be an indication of where the Fed might go on the 14th or the 15th. We also had factory orders as well. Those are not slowing down. So this is very serious stuff. Bonds are up right now. They may not be up on the day, but if you look at the TLT chart from just a few weeks ago, I mean, bond prices have recovered a lot. But we have the stock markets that are just getting brutalized. I mean, the NASDAQ looks like it's on the edge of a cliff. Same thing with the S&P 500. I really do think it's possible we see a third wave, a third leg down, and that leg could be steeper and last longer than the previous two. Again, Elliott wave theory, following the Dow Industrials as well. Everything was down today. Everything was down. 95% of the S&P 500 stocks were down today. So the market continues to get brutalized. And it's because of all of these worries. And this is the weird twilight zone that we're in. I used to never understand it. But it was like when good news comes out, sometimes the market falls down, right? Sometimes the market will actually capitulate on good financial news. Maybe not capitulate, but we'll see these huge swings, a lot of volatility to the downside on good news. And I used to not really understand it, but it's one of those scenarios where, the good news is bad, because if it's good news, if the economy is expanding, if the services sector is growing, if factory orders are growing, if all of this is happening, it means whatever the Fed has done so far is not quite working, because they've been raising rates now for 6 months. I mean, we're now in our 7th rate hike coming up here in December. And the mainstream media narrative is still 50 basis points. 50 basis points. They don't even want to really entertain the idea of higher interest rates than that. And as I was saying in my video yesterday, I talked to a couple people in my church. There's only 2 people I know in my church that actually trade or have anything to do with the stock market. One of them happens to be a broker, and he thinks it's just highly unlikely that a 1% interest rate hike in December is possible. The broker doesn't think it's going to happen. But the guy that trades futures that I know, he says it's unlikely too, but it's not impossible. And that's what I'm thinking. It's not impossible to do 1%. And, maybe it's my ego here, but I keep thinking to myself, what if I was like the one guy betting on a 1% interest rate hike, a full percentage point interest rate hike in December? And what if I was right? You could make a lot of money if you were the contrarian on that trade. You can make so much money. I mean, just pick your instrument, pick your option, pick your put, pick your stock. If you could guess that right, it would be epic. But, 75 basis points to me seems more likely, because here's the other thing that I don't buy into is the terminal rate, right? The peak of the interest rates at 5%. The mainstream media reporting that Wall Street anticipates about 5%, maybe 5.25, 550. All right. I mean, we had statements from the Fed, from Jim Bullard of the St. Louis Fed, talking about 6% and then 7% interest rate hikes. And 5%, the number doesn't seem esoteric enough to me. It would make more sense if they went to 6%, kind of flirted around with Satan's number a little bit, and then went to God's number, 7%, and then maybe kept them there. And the idea that we're in high interest rate environment right now, we're not in a high interest rate environment right now. We're in a very low interest rate environment, even now, even after the 275 basis point increase in the last 6 months, going from, near zero to almost 4% now. So if they are going to go to 5%, it makes sense. If they want to get there anytime soon, it would make sense that you would just go up 75 basis points, if not a full percentage point. I mean, because let's say they're at 3.75 right now. I think that's where they're at. If you go up a full percentage point, which is 100 basis point, which nobody think that's even possible. Let's say you do that. Well, then you're at 4.75%. You're almost at 5%. Almost. And you would just have maybe one more 50 basis point rate hike and you'd be at like 5.25, which is what the media claims is their terminal rate target. I don't know. It seems to me we might have to go higher than that, especially if the numbers, the employment numbers, the services numbers, the factory numbers, if all of this stuff doesn't slow down and really start, crashing, I don't see why we can't go way above 5% for interest rates. It's not like 5% is that high. Look at all these other countries. You got some countries that have interest rates at like 11%. I think Turkey's is like 11%. So these are not high interest rates at all. And the narrative that they are, or that we're in higher interest rate environment, I don't want to buy into that at all and get, overly bullish on that kind of sentiment. That's my point. So, the Santa Claus rally, I'm betting against it every day. I don't know if I'm going to hold a lot of exposure overnight, but every freaking day, based on the news, I'm going to be betting against the Santa Claus rally. I mean, we're in December 5th now. This is December 5th. This is the first full week. If the rally doesn't happen this week, is it going to happen next week when they raise the rates? And what if they don't raise by 50 basis points? And what if they raise by 75 basis points or 100 basis points? How's the market going to react to that? Let's say they raise by 50 basis points. Is that going to be good for the market? Is that going to make any difference that it's not 75 basis points or a full percentage? These are all the things that I'm thinking about. But I am going to be trading the news. I'm going to be watching the news. Volume and price action is extremely important. But without trading news, I really don't know how I would do what I'm doing now. But it's just, the news is just such a part of my process. And we don't have to keep our eyes on everything. I want to talk about gold and silver, by the way, and commodities, oil as well. Oil sank like 8%. I want to talk about that before I close this video, but we don't have to focus on everything, right? You don't have to focus on every Fed Ghouls comments. You don't have to focus on, what Morgan Stanley or Bank of America. Really, you have to focus on the FOMC meetings, and you really have to just focus on these headlines to gauge, compared to what the Fed has said, and what they want to see, what are we seeing now? Is the Fed going to be publicly happy or not? Are they going to be satisfied or not? Are they going to be able to face the public and say that they're slowing down the economy or not? That's really the main things to pay attention to. And maybe some of the price action in the markets. I don't have time to pay attention to every single little detail, every single comment from some MSNBC commentator. I try to read as much as I can, but really that's what I'm paying attention to, is the Fed, the economic figures, numbers, the headlines basically, right? Because let's be honest, I'm not actually thinking about the numbers. I'm just thinking about what it's going to mean, right? Whether it's slowing down or speeding up, whether we're going higher or lower, what does it mean? And how does the Fed going to react to it? So that's really, really important. And then obviously, like I said, the price action, you got to follow it, at least the indexes, I would say the bond market, currency markets as well. And by currency market, I don't mean shit coin markets, right? I mean, you can follow the shit coin markets. I didn't even, not once did I even look into Bitcoin's price today. I mean, that's how, I'm not saying it's irrelevant, but that's kind of how just unimportant it is to me right now. I didn't look into the shit coins or Bitcoin. I didn't look into it one time today. And I didn't see any headlines on trading economics. So I'm figuring, it's not that important. But who knows? Maybe the crypto market is collapsing right now and it's going to drag everything down tomorrow and I'm completely oblivious to it. I hope that's not the case. But let me know what's going on in the crypto markets, guys, because I'm serious. I just don't follow the crypto markets like I should. Commodities. All right. We've got oil down 8%. They're predicting better weather over the next 2 weeks. So maybe some lower demand and stuff like that. More supply as well coming online. You also have China opening up. I didn't mention this, but supposedly China is reversing course on their, zero COVID policy. I mean, that might be good for the economy, right? For the economic numbers. But again, think about this. It's going to be bad as far as what the Fed is going to do, because China locking down and kind of stifling the global economy is actually sort of good because it's going to slow us down a little bit, and the Fed might not have to raise as fast or as high. So just consider that. But when it comes to the oil, obviously the China market affects that as well. But oil down big in one day. I mean, literally an 8% move, I think, on the crude futures contracts. So, and gold and silver. Gold and silver pulled back a little bit. Not a whole lot. But silver is like right there at what I would call pretty much an area of support. It's above a pretty major area of supply. It kind of broke out of it, and it's pulled back a little bit. So I'm going to keep my eyes on this. Gold as well is cooling off. I think it was like 1768. So gold and silver are cooling off a little bit. I want them to cool off even more. And it would be great if we saw huge dramatic declines in precious metal prices. Don't know if that's going to happen because, people need to rely on something. If you can't rely on the dollar, if you can't rely on the stocks, if you can't rely on the cryptocurrencies, what else do you got? You got precious metals. So I think so many people, this is another factor not enough people are talking about, and I'm not thinking about enough. 20, 30, 40 years ago, did you have as much public interest in precious metals as you do today? Because of the internet, because of the silver stacking channels, whatever it is. I don't think so. So the fact that we have, and I'm one of them, right? I'm holding my metals. I'm always wearing my metals. The fact that you have this base of, investors, traders, speculators that are participating this much in the precious metals, how does that affect the stock market long term? How does that affect the crypto markets long term? This is why we got to try to keep our eyes on everything. But with that, let me know if there's anything that I missed. I'm going to go ahead and get out of here and eat some dinner, maybe drink some wine, maybe do a stream. I'll definitely be back to stream with you guys soon. And follow me on Instagram at Millennial Trades, where you can follow all of my trades and my stories, my catering gigs. Like I said, I'm going to be catering the next couple of days. It's good to do physical labor. It's good to do manual labor. And it kind of involves like people from my church and stuff. So it's just good for the soul. But St. Paul, in his letters to the city-states in the New Testament, he talks about how men should work with their hands. Work with your hands and become independent so that you don't depend on other people. And he said that this will attract outside respect and honor, basically. So, I mean, it's kind of like a spiritual thing too. It's okay to work. And I do like working. I like being able to, prepare food and set up tables. And it just depends on the event that I'm doing, the catering event that we're doing. But yeah, manual labor is good for the soul. I guess I'll leave it at that. As always, until next time, I'll see you on the next video.